Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 21st, 2024, and today's topic is, was I completely wrong about Bitcoin? I said, for those of you who aren't subscribed, who don't follow my work, I said something quite bold, quite contrarian. I said Bitcoin was targeting $71,000 to the downside, okay? And I also said that this move to the upside was corrective in nature, so we'd most likely see a retracement upon itself. So that's something I'm going to investigate seriously today. And if I was wrong, I'm going to show you what Bitcoin is likely to do to prove that I was wrong and to continue this rally to the upside. So if that sounds interesting to you, then watch until the very end. I'm also going to talk about what I expect from altcoins. Let's get into it. So Bitcoin went a little higher than I thought it would. I did not think that we would go to these levels, and it seems as if, 99K right now, as I calculate it, is the top for this move. Okay, if we blast through 99, 100K, then all bets are off. I completely have to throw away my my trading plan, my my trading thesis on this read. But so far, it's still, it's an extreme example of this sort of correction, but it's still in play. This was your initial break, and this kind of was a super aggressive B wave, and that this is, as I spoke yesterday about, a type of Wyckoff thrust after distribution. UTAD, ultimate thrust after distribution. You can also read it as, all right, let's say that the discrepancy between this and this is too great, and you think there's no way there's still an A-B relationship between these two, and I can understand that because it's quite extreme, and it's right now, if you measure it using your Fibonacci retracements, this is at the ultimate edge of what would be mathematically permissible as an A, B, C correction. This is at the ultimate edge. So you could say probabilistically, it's more likely that this is just a type of wave 4 correction, complex flat correction, and this is just a wave 5, and then you're seeing some sort of topping pattern on the small time frame here. So that is on the table. Now, to get to the great part, if I'm wrong, what happens? Well, for one, we completely blast through 99 and 100K, and then I'm completely wrong. And then I have to just reevaluate. And let me just say that being wrong in technical analysis is part of the game. If you're uncomfortable with being wrong and sharing your opinions and being wrong and being trolled, then you're in the wrong business. My concern is not necessarily to be wrong, it's to protect capital. That's my first and foremost concern, which is why I looked at this as a rounding pattern, and I called to sell here. From there, we rallied 30%. Okay, and I really want you all to understand this. I called a sell of Bitcoin at this level here, in this flat correction where you were exhibiting rounded patterns. And some people, oh, that's stupid, Dean, because that was 30% ago. That was like close to election day, and we rallied 30% from there. Oh, you really suck at this. No. The whole idea is you issue a trading thesis, you develop one to the best of your ability, and you protect your capital. And if you see threats of an end of a rally, you try to take profit and get out. 30% is a lot, yeah, but in a bull run, it's not much. In a bull run, it's not much. So I like that read still, even after the fact of seeing what Bitcoin did, because I'm looking at this and I'm like, yeah, that looks toppy. And I'm looking at this and I'm like, yeah, that looks dangerous and toppy. And all of this, it just looks way too messy for me. And if I didn't sell here, I would have damn sure sold here. This is just very risky. And as traders, I think it's important to minimize risk as much as possible, because if you don't protect your capital, you lose. You can't play the game anymore, right? And the idea is to take big chunks whenever you can. You don't always get the luxury of taking 100% of a move. If you can, great. But if you can take 70% of it, that's also excellent. And you compound that over time, and that's a winning trader. So I just want to explain that for some of you who may not understand why some of my calls may be a bit conservative sometimes. I don't know. I'm making educated guesses. That's pretty much my job, right? In any case. So if I'm wrong, for one, we'll exceed 100K easily, just like most of the Twitter analysts are saying, and we'll never retrace. Okay. Unlikely. Very unlikely. Okay. What's more likely than not? We're going to retrace at some point. Okay. Especially in this region. It's very likely that we retrace. And we've actually even started with this. This is a clear initial break right here, which should yield a further retracement, because these initial breaks are just the first wave and every corrective pattern comes in three. We learned that in Elliott wave analysis. So if I'm wrong and Bitcoin does retrace, it'll only retrace about 5%, and it'll only retrace to about 94K, and it'll hold that level. I'll say that one more time. If I'm wrong about Bitcoin and this rally being a legitimately impulsive rally, then we will retrace from here, which you should want to do if you know anything about any sustainable rally has to have retracements intermittently, or else it's not sustainable, right? It's just like breathing. You can't always breathe in. You have to breathe out sometimes, right? So the chart has to breathe out and retrace. Now, a healthy retracement in a rally, in an impulsive rally, respects the phi ratio, or the 0.618. The impulse that I identify that is kind of inarguable is this one right here, starting right here. Okay, so if you read that and you pull your fibs from the bottom here to the top, okay, you get a move that has a phi ratio at about 94K. And that makes sense, right? Because you're taking this previous sort of consolidation that you spent about 6 days on, and you're flipping that resistance into new support, and then you continue on your way. So it makes sense in a lot of ways. So if I'm wrong, Bitcoin retraces from here and holds this 94K level. If I'm correct, what you're going to see is this. More likely than not, what you're going to see is complete disregard for that 94K level. And I think, and this is just a hunch, that the retracement, the larger retracement, looks something like this. One, it's violent. Lots of stops hit, right, from longs, thinking that it's going to continue to go up, because it's going to be a relatively large retracement and relatively fast retracement. And it's not going to find support where you think it would find support. So it's just going to boom, boom, right? It's going to find support for the first time. Let me show you this whole thing. I'm sorry. I know what it looks like, but you may not, because I didn't show you the whole thing. All right, this is what the whole retracement looks like. I think it looks like a zigzag. Reason being, I think that once you come down here, your first level of support is going to be the top of this multi-year channel. And then you get a bounce. And that bounce, people are going to think it's finished. And that bounce essentially retests the bottom of this 6-day wedge. Previous support now turned into resistance. Basically, that 94K level that we didn't hold, we hit our heads above it, right? That's a principle of technical analysis. If you're in a downtrend, to justify or to confirm the downtrend, you turn previous support as new resistance. So that's what this is. So down, support on the multi-year channel, up, 94K hit, previous support is new resistance, and then down back again to our target of 71. I'm still on the side of this. Again, I don't know. If I did, I wouldn't be on YouTube. Maybe I still would, because I actually enjoy sharing my analysis. So maybe I still would. But if I knew everything, I'd be a Brazilianaire. And I don't know if I would share everything I know. But I believe this still happens because, as I've said before, we have serious CME gap here. And actually, I've never done this, but let me show you. There's an actual indicator that shows the CME gaps. And as you can see here, I've talked about it. The indicator shows you the CME gap is here, right here. Oh, come on. I seem to have lost my pen. All right, it's right there, right? And that's a big one. That's a really big one. If it's not that big, who cares? You know, going up to from here means we don't come back, right? Technically, it doesn't make any sense to come back. If we go up from here, we go up much higher. There's no reason to come back. But that's a big CME gap to be left unfilled, and these CME gaps get filled more often than not. So again, my thesis of coming down first to around 78, right, where we first made the first CME gap, and then back up to 94-ish, around there, right? It could be like this. Again, this is corrective. This is all corrective. So there's no rhyme or reason. This can look however it wants to look. And actually, this is also part of the difficulty in reading this uptrend right here, because it's corrective, as far as I know, it's corrective. So although it's an uptrend, it's messy. So that's another reason I think I'm correct in my larger thesis in seeing a big downtrend. It's super messy on the way up. You'll see in the bull run, when we actually start hitting proper, like, 50, 60, 80, 90% days, 100% days, you get nice straight green candles. None of this choppy chop bullshit. This choppy chop bullshit screams corrective price action. Corrective price action tends to retrace upon itself. Don't be surprised if my larger thesis still is correct. Again, I can be completely wrong. But if you're exposed, I would recommend having this in the back of your mind, because a lot of people who've completely dismissed this as a possibility, or a probability, even a high probability, are going to lose a lot of money. They're going to lose a lot of money. The excitement in the market right now is palpable, and it is such that some people are probably over leveraged and overly confident in the idea that Bitcoin, given that it's hit 98, 99, almost 100K, is going to continue that trend. And we've completely left the lower levels. And when I see theses about retracements, they're like small mini retracements here and there. This would make the fools out of most. And remember, the market loves to do that. and I'm not just calling willy-nilly capo style like 20K retracement. No. I've substantiated this. I've told you this for a while and why I believe. Okay, so it's not just that there's this CME gap that has yet to be filled, but also there's this level right here at 71K, which was your long-standing resistance for 7 months that has yet to be properly retested. And again, this is just a principle. And for those of you watching, thinking, well, damn, Dean, like, you must be getting all kinds of trolling and hate, and nobody really thinks that you're making sense. Yeah, people unsubscribing, yeah, absolutely, but that's part and parcel. That's kind of like exactly what happens when you're reading the market correctly. In my experience, all my great reads, nobody's had, or very few, very, very, very few people have had. So few that I didn't know anybody else. I'm sure there's somebody else saying the same thing somewhere on the internet, but I don't know any. And that's typically what the market likes to do. Crazy things that you would never imagine. So just be careful, protect your capital. Last thing you want to do is lose all your stuff, lose all your ammo before the bull run. If you miss 30% here, 20% here, it's okay. You want to be cautious. You want to take risks, but calculated risks. That's my best advice. Okay. So I talked about what happens if I'm wrong. I've talked about what would likely happen if I'm correct. And now let's look at altcoins. So again, this move would be from here like a 27% move, but I don't think it happens all in one fell swoop. I do think that we get this in a zigzag type thing where you get a big bounce, and in that big bounce, my sense, this is all instinct and kind of mixed with a bit of technical kind of analysis, but my sense is that on this bounce, alts run, because a lot of altcoins are closer to their support levels, and they would hit their support levels on this first declension. If Bitcoin goes down 18, 19%, 20%, a lot of altcoins would hit their first support, their actual final supports before moving up. So let's look at Ethereum. I just want to look at Ethereum, and I'm going to use Ethereum as a proxy for the altcoin market at large right now. Okay, because as you can see, as you know, despite Bitcoin doing what it's been doing, altcoins haven't done anything, generally speaking. Even though you can see Ethereum's up 9% for the day, it's not much. So you have a lot of people thinking, oh, that 9% is the start of it. No, it can't be. And I'll tell you why. It's not that it can't. It's unlikely that it is. It's unlikely that it is because this retracement is insufficient. What does that mean? So if you pull your fibs from this, I hate it when my pen doesn't work. I'm sorry. It's a pet peeve of mine that happens halfway through like every video. If you pull your fibs from this impulse right here, you can see that we retraced, but we didn't retrace enough. Okay? What does that mean? I mean, we didn't even hit the 382. The 382 is a minimum retracement for any impulse. And so when I pull fibs on that and I look at it and I'm like, oh, that's not over. It's not over. It's not over. This looks like that to me. Why like that? Why down here? Why doesn't it respect the 618? Two reasons. One, I think the base of this move in a lot of altcoins is corrective, meaning that I think this is a flat correction in the making, meaning it's a 786 retrace, not a 618 retrace. And the idea that you have left this this channel that we've been consolidating in since August, So a 92-day consolidation without retesting the top is unlikely, right? So again, this is basic technical analysis. This is basic trading, right? Support and resistance. So 92 days, you chop, you chop, you chop, you chop, and you finally leave. But what about the retest? You can't leave. I'm sorry, my lines are so squiggly and nasty. It's because I'm not using my pen. I'm trying to do this with my mouse. Excuse me, but I hope you understand what I'm trying to say. I'm trying to draw a line at the top of this channel and showing that this is a very natural, normal retest, right? It could stop at the 618, but I think it's 786 retrace. I don't know. That's just my sense. And if I was trading it, I would trade for a 786 retrace. I would expect that. And if we get a 618 retrace, great. But I still expect a retracement. So do you see? I expect altcoins. So this is just looking at Ethereum. In this case, Ethereum, I would expect a 20% declension just to finish this 92-day channel that it's been in and then start its bull run, right? So altcoins across the board have yet to be ready. They're not ready yet to go up. That's another case for why Bitcoin is likely to go down in the way that I think in my larger thesis. Because if it just continues to go up, then what spurs altcoins to do that? Like, where is, altcoins don't move down unless Bitcoin moves down. Bitcoin's got to move down at some point, and that seems like my larger thesis of coming down first 20%, going up, and then coming back down to 71 seems to fit in with what altcoins seem to need to do. I hope this all makes sense. This is all I've got. I'm trying to keep it short, and, trolls, keep it coming. I don't mind. I really don't mind. It's all part of the game. It's all, I don't take it personally. I hope you're making money too. I hope everybody's making money. I'm not a crystal ball. I'm just sharing ideas. If you find value in my ideas, like the video, share, subscribe, click the pinned comment at the link below to buy me a coffee if you feel inclined. And that's it for me. I'll see you next time. Bye.